Hello everybody, this is Lara with your weekly video for the S&P 500 for the trading week ending Friday 25th of June 2021. The primary trend remains up and I have two wave counts this week. My main wave count is now going to assume the trend remains the same and it expects more upward movement. Short-term invalidation points can be used, 4271.2 and more importantly 4256.6. If we see a new low below 4256.6 early next week, then we may be seeing another pullback. The target for it to end is 4136 to 4131, but that could be too low because it could just be a sideways moving triangle. If price remains above those two invalidation points for the short term, 4256.6 most importantly, if it remains above that, then the next minor degree correction may arrive before price reaches 4690.27. We'll use the upper edge of the channel for resistance. I have a longer term target for the bullish count at 5468. Elliott Wave Analysis first, classic analysis last. And this Elliott Wave count is very bullish. It expects that a cycle degree fifth wave began here and it may take years to continue. Cycle degree waves should last from 1 to several years, and I expect that this one is going to last possibly about 8 years if it ends in 2029. And this is just expecting that this market may mirror the 1919 up until the 1920s, when it reached a huge market peak in October 1929 and then had a huge crash. And that was following the last global pandemic, the Spanish flu pandemic in 1919, I think. And so if we see the 2020s mirror the 1920s, then we could be in for quite a strong bull market. Price just does keep going up, so far that expectation is being met. Within this bull market, I am expecting that cycle 5 may subdivide as a 5-wave impulse. That is the simplest, most basic Elliott wave structure. Here's an example at a lower time frame, a lower fractal, 1, 2, 3, 4, 5. And so for cycle 5, I'm expecting primary 1, 2, 3, 4, 5. Overall, possibly to end March or October 2029. Primary 1 itself, a lower fractal, subdividing as an impulse with intermediate 1, 2, 3, 4, 5. Intermediate 3, the middle of it, for this market, it has a strong bullish tendency to have extended third waves. So far, 1, 2, an extended third wave, 4, 5. I have a limit, not a target for minor wave 3 though, because within it, 1, 2, 3, 4, 3 is shorter than 1. A core Elliott wave rule states a third wave may not be the shortest, so 5 is limited to no longer than equality in length with 3 at 4690.27. I've relabeled my labeling within intermediate wave 3 after taking a blank chart and having a look at a different way of labeling it, and I have an alternate where I'll follow this same labeling. We'll look at those two on daily charts as well. When minor wave 3 is over, then minor 4 may last a couple of weeks. Minor 2 only lasted 2 weeks, so I'll expect minor 4 could be over in 1 or 2 weeks. If it's a quick sharp zigzag, it could be a more long-lasting, big choppy sideways movement like a combination or a triangle, and it may not move into wave 1 price territory. When intermediate 3 is over, then intermediate 4 may not move into 1 price territory below 3588.11. Let's take a look at the daily chart with this labeling here, from this low here, intermediate 2, this point down here. Here's the start of intermediate 3, possibly with minor 1, a deep zigzag for minor 2, an impulse for minor 3 incomplete, with an extended first wave, double zigzag for the second, third wave shorter than the first, but the middle portion of it is the strongest piece of upward movement, and the middle portion of the third wave exhibits the strongest histogram. So this fits with MACD, this Elliott wave count. The limit for minute 5 is 4690.27, but use this channel, draw this channel from 1 to 3 with a copy on 2, 4 looks like it remains contained within the middle of the channel. 5 is approaching resistance at the upper edge. We may not see the 5th wave strong enough to break through resistance at the upper edge, and so it could possibly end a little bit sooner than expected. But when minor wave 4 does arrive, minor wave 2 only lasted 2 weeks. I really would not expect minor 4 unless it's a triangle, just a sideways moving wave in an ever declining range. Unless it's a triangle or maybe a combination, I wouldn't expect it to be much longer lasting than minor wave 2. And minor 4 may not move into wave 1 price territory below 3949.85. The target for intermediate 3 is for it to reach 1.618, the length of intermediate 1 at 5468. At the hourly chart level, here's minute 3, 4 a double zigzag, and 5 unfolding with 1, 2, 3 incomplete. 4 may not move into 1 price territory below 4256.6. Within 3, 1, 2, 3, 4 may not move into this wave 1 price territory below 4271.2. If this first short-term invalidation point is breached, then this part of the wave count would need to be relabeled, and I would possibly see minuet 3 over here and minuet 4 moving lower, which means then that this becomes the next important short-term invalidation point. If this invalidation point is breached, then I would probably label minor wave 3 over and minor wave 4 in its early stages. So that's how to use those two. At the daily chart level, this is another way of labeling intermediate wave 3. Instead of minor 1, 2 over here, I've got minor 1 and 2 over here. This is a good looking 5-wave impulse, a double zigzag for 2. Minor 3 could be over at this high. We've still got the middle of the 3rd wave showing the strongest momentum, and the middle of that showing the strongest portion of the histogram, so it still fits with MACD. But here we've got an extended 1st wave and a shorter 3rd wave. We have that problem with both ways of labeling it, but here it's at minor degree, and I would prefer to label that issue at minute degree, an extended 1st wave, a shorter 3rd wave. At minor degree, I think it would be more likely to see, what my experience and research shows, that the 3rd wave at minor degree would be more likely to be extended. But this is possible. We need an alternate to consider. If minor 3 is over here, minor 4 could still be continuing further as an expanded flat, A, B, C. The target for C is about 4131. Sorry, I pulled it a little bit too low on this chart, but that's about 4131, which is around about where C would reach 1.618, the length of A. And minor 4 for this wave count can't move into wave 1 price territory below 3950.83. At the hourly chart level, A, B, C. B is a 1.32 length of A. The common range of B waves within flats is up to 1.38, and B within an expanded flat does move beyond the start of A, making them particularly difficult and tricky structures to work with, because they're trying to tell you that the old trend is resuming, but it could be a B wave. We do have to still consider this possibility, and we should work with those alternates on the first hourly chart. If that lower one there is breached, then let's expect that this could be happening, and I'll expect downward movement to follow for maybe 2 or 3 days. It does tend to move quite quickly when this market moves lower, so maybe only 2 days to the target of 4136 to 4131. But please also just be aware this is not the only structure for minor wave 4. I've mentioned it in the text, but if you're only looking at the charts and watching the video, I'll have to note for everybody, please, that minor 4 could also be a triangle. It could be labeled A, B, C, D, E, like a classic triangle pattern. Sideways movement in an ever decreasing range. Elliott wave triangles have more strict rules about them though. A, B, C may not move beyond the end of A. So for a triangle, we may not see a new low below this point. C may end somewhere in this area, and then D can't move beyond the end of B, and then E can't move beyond the end of C. So those are quite strict rules for Elliott wave triangles, with the exception of D and B for a barrier triangle, but it's only slightly not strict. Okay, classic analysis now. Which of those two wave counts has more support this week? Last week we had a bearish engulfing candlestick pattern. It had support from volume, but I pointed out that this had happened before and it was just followed by upward movement. That's happened again. We've just got a strong bullish candlestick now. We have this bearish divergence between price and RSI. It really is quite weak, and I expect that'll probably be resolved in another week or two, with RSI just continuing higher as price continues higher. If we look back at the price history of this particular market, RSI can reach deeply overbought and it can remain there for years while price continues higher. This particular market has an extremely strong bullish bias. This divergence is too weak between price and RSI for me to give it much weight, although it would support if you wanted to find technical support for that alternate wave count, and this is another reason why I have to give it to you. It's possible. That outlines risk to long positions here. If we do see a surprise deeper pullback, look for support about 3980. But this week prices closed to new all-time highs. A little bit of weakness from volume compared to the prior downward week, but for the upward weeks volume is actually showing some increase, so there's a little bit of support from volume, and in current market conditions that's actually pretty impressive. On balance, volume is above support. It doesn't confirm new highs, but I don't give that much weight. That'll probably, just like RSI, that'll probably be resolved in another week or so. ADX is declining. There's no clear trend at this time frame, but if it ticks up, then it would again indicate an upward trend with a long way to go before it may become extreme. MACD bearish, but not fully so, and overall ATR flat to slightly declining, absolutely normal for this market. At the daily chart level, we see quite a good push from volume for Friday's upward day, closing to new all-time highs. That's actually pretty impressive for this market in current conditions, and that supports the main Elliott Wave count. Look for support now about 4238. ADX at the daily chart level is below 15, too low to indicate a trend. ATR declining as price moves higher, normal behavior. On balance, volume gives a pretty weak bullish signal. It doesn't have a new range. I'm not really noting this bullish signal. This trend line was weakened here. Not really a very good test here. It's breached again. It would support the main Elliott Wave count, but it's a pretty weak signal because the breach of the line reduces the technical significance of it. RSI is in neutral territory. There's long been this midterm divergence, but price just continues on higher, so I'm not going to note that for you. There is that short-term divergence here. It's just too weak to note, but if you want to find evidence for a short-term bearish Elliott Wave analysis, there it is. It's very weak. MACD has, actually I need to note this on the chart, has just given us a bullish crossover this week, so that supports a bullish Elliott Wave count, and stochastics is overbought. Okay, to round out the picture now, let's take a look at breadth and volatility. Between price and the AD line, price has made new all-time highs. The AD line has failed to make corresponding highs. There is very weak short-term bearish divergence here. This has happened before here, and yet it was just followed by upward movement. It happened here, and it was followed by a little bit of downward movement. So this again would be a little bit of support for that alternate Elliott Wave count. That's another reason I'm giving it to you, but it's quite weak. At the daily chart level, we have 2 days in a row of bearish divergence between price making new all-time highs, but the AD line failing to follow through with new all-time highs. Again, this happened here, and yet it was just followed by upward movement. It may fail, sometimes it fails, but it does work more often than not. It's not very strong, but it does support the alternate Elliott Wave count. That's another reason why I'm giving it to you, and use those as validation points for it. What about volatility? Volatility is inverted VIX has made a slight new high, as has price. There's still mid-term bearish divergence, but no short-term bearish divergence at the weekly chart level. At the daily chart level though, there isn't bearish divergence. Inverted VIX has made a new short-term high, price has made a new high. Now because the AD line and inverted VIX do not agree, and because that bearish divergence with the AD line is weak, I'm not going to give it too much weight. Now this is why my main wave count is bullish, but I have to give you that bearish alternate. It is possible, it outlines risk, and I've given you those very specific invalidation points to work with there. Here's some more support for a bullish Elliott Wave count. VVIX has made new short midterm swing lows. VIX has failed. The volatility of VIX is declining faster than VIX is. This is bullish for price, supporting a bullish Elliott Wave count. That's all for me at the end of the week. On balance, weighing all of that evidence up, I have to lean slightly more bullish than bearish, particularly that strong volume for Friday. But the picture is still not as clear as we'd like it to be, so I have to give you that bearish alternate. That's all from me. I hope you're all having a fabulous weekend.